All right. Wonderful. Well, thanks everybody for joining us today. I think it's time to get started. We've got a lot to cover and relatively little time. So I think we'll just jump right in. And I'm pleased to welcome you to the first webinar that the Social Impact Measurement TIG is hosting this year, 2021, the first, but certainly not the last one, called Meeting the Moment. What is the role of evaluation in the age of impact washing? My name is Ben Fowler. I'm the program chair of the SIM-TIG. I'm also the co-founder of Market Share Associates, which is a global consulting firm that focuses on bringing actionable insights to economic development. So without further ado, I'll give you a brief background to the social impact measurement interest group. Essentially, we're a group of members who are interested in topics of social impact measurement and management. We come to this topic with a range of different backgrounds. Some of us are evaluators, commissioners of evaluators, of evaluations, investors, or investees. The SIM-TIG is hosted under the American Evaluation Association, and we're always welcoming new members. So if this sounds like something you'd be interested in joining, either as someone to receive information about what we're up to, or to join in more of a leadership role and participate with us in developing and posting content like this, please get in touch. I've shared a link on the slides, and you can also access it through a link that we'll put in the chat box. This, as I mentioned, is the first, but certainly not the last of the content that we have for this year. Next month, on October 19th, we're going to have another webinar on applying developmental evaluation in new environments. And we're going to post in the chat a link for those of you who are interested, so you can register for that. And given the nature of the world right now, the American Evaluation Association's annual evaluation conference is going to be virtual. And one of the implications of that is that far fewer sessions are going to be happening this year than usual. That meant there was a ton of amazing content that was not going to be possible to all squeeze in to the conference itself. And so we're very pleased that the two sessions we're doing before the conference are going to be also chances to feature some of these great topics. But we do also have some content at the Aea Evaluation Conference, which is happening from November 8th to 12th. First, we have an annual meeting. It's open to all, so you're all welcome to join, even if you're not a member of the AEA. And then if you are, there are also two, or if you'd rather just join the conference, there are also two other sessions that the SIM-TIG is going to be hosting. One of them is on changing the valuing frameworks in gender lens investing. The other one is on creative ways to evaluate the social impact of investors and businesses during a global economic recession. And then final point is that after the conference in December, we're planning to also circulate some short, approximately 500 word or so synopses via a newsletter that we'll be sending out on some of the other great submissions that didn't get included in the evaluation conference. So if any of that sounds like it's of interest, please let us know, sign up to hear more from us, and we'll share more in the chat box for how you can do that. So without further ado, recognizing just how much there is to do, I have the unenviable task of getting to introduce today's speakers. Unenviable because I think for any one of the speakers, I could probably spend 5 minutes, and instead I'm going to try and just give a few sentences. First off, Veronica Olazabal. She's actually a co-founder of the SIM-TIG. She's also a managing director at Rockefeller Foundation, and she's the president-elect of the AEA. She has spent over 15 years working across 4 continents on impact investing, and particularly with a focus on technology, data science, and social science. We also have Aea Sobczynska, hope I pronounced that correctly, which is who is an international development specialist with over 15 years of experiencing managing, monitoring, and analyzing programs and projects from a multi-sectoral perspective. Aeva's worked with a variety of different institutions, both as a staff and a consultant, on topics including strategy development, adaptive management, monitoring, and evaluation. Next, Jane Reisman, who's been a longtime member of the SIM-TIG and has given many contributions both to the TIG, but in many other areas as well. She is someone who connects the dots between impact measurement and management. She founded ORS Impact, a US-based evaluation company where she worked for over 25 years, and presently is a social impact advisor who's actively leading and building field building efforts to strengthen impact measurement and management. Finally, we have Sarah Gelfand, who's a managing director who's a managing director. Why is that not in my bio notes here? Oh, blue mark, pardon me, my mistake. She co-leads business strategy, business and product development, and supports the firm engagement with various market building and standard setting initiatives. She's also one of Impact Investors Investing's early pioneers. She was a founding director at the Global Impact Investing Network. So with that, I'll now turn it over to Veronica to take us forward with the great content we have today.
Fantastic. Thank you, Ben. I can't see anyone at the moment. Do you want to take down the slide, Ben? I don't know if you're the one sharing. Great. Hello, everyone. I'm excited to be here. This is a great topic. And so thank you for the AEA Social Impact Measurement Topical Interest Group for bringing us together. This topic is particularly important and critical given the backdrop of a warming planet and a global pandemic, and I think you would all agree with me on that. And against this backdrop, impact investing, which is investing both for financial and social/environmental performance, continues to grow globally on the one hand, and on the other, there's increasing public distrust in claims made by businesses and finance communities and skepticism towards impact washing, which is what we're here to talk about today. To realize the full potential of impact investing to advance the Sustainable Development Goals, as we often talk about, and to address the climate crisis, we must ensure that these investments are made with integrity in a way that they are managed and in the results that they are delivering. And this is something that the evaluation community knows a bit about, I would expect. So today, we're here to unpack further what impact washing means, what impact verification and assurance, which might be a new term for some of you, is, and the role of evaluation in this narrative. And so before we get started, I did want to get a little bit of a sense of what was the room's feel on this topic of impact washing. So we have a poll for you, and that we hope will be up and running. Sasha, do you want to just run the poll? And the question is, on a scale of 1 to 10, how big of an issue is impact washing for you, for the world, for your practice? And so choice 1 being not an issue at all, and choice 10 being a huge issue. Go. And I think you have to make it live.
No, people seem to be answering.
Oh, fabulous, fabulous, great.
Yeah, so we have 20, 30, 31 people answered. A few more and I can end it.
And as we're waiting for the poll results, I'll just do a little bit of a run of show. So we're going to start off with thinking a little bit more about what impact washing is with our colleague Eva. And then we're going to move into an exciting area that is called impact assurance with our colleague Sarah from Bluemark. And then we're going to round it out with Jane speaking from the evaluation perspective on what's on the horizon and how these areas all play in the sandbox together. So Sasha, do you want to share the results of the poll?
I'm going to end the poll right now. Just take a screenshot. Right, I can share the results.
Fantastic. Yes. So we see that the majority of you are in the 8s in the warm category. A bunch of you are in the range of 5 to 7. And then a few of you are in the range of 9 to 10. And so I'm excited to see this diversity of response because this means that there's a lot to be discussed, there's a lot to be learned, and there's a lot to be engaged upon. And so with that said, I'm going to close my screen. I'm going to hand it over to Eva to talk to us a little bit about what this thing called impact washing is all about.
Hi, thanks, Veronica. Sorry, I was challenged by unmuting myself. So thank you so much, everyone. Let me just proceed with my slides. Again, my name is Eva Sobczynska. I'm an international development specialist. And maybe like many of you, I've worked in public sector financing for most of my career. And I think that one of the questions I've been asking myself of the past few years is how else, we have these scarce resources in public sector with which we want to have an impact. So how else can we make sure we address these important issues, as pointed out by Veronica: climate change, environmental degradation, all the societal issues, inequality. How can we address them? So private sector financing definitely can offer some solutions and definitely can offer additional financing. So what I wanted to do today is to give you a flavor of some of the research I've done, thanks actually to Jane and Veronica, who I met last year at the American Evaluation Association Conference, and had a chance to also engage with them in the wonderful workshop that they've put together in the spring of 2021, and meet some of you, including Sasha, and really delve into this question, what is this impact investing? Why should we care? What are the challenges of impact washing? And ultimately, why it should matter to evaluators like us? What are the role that we can play in this field? So what is impact investing? You might have heard quite a lot about ESG type of investment, sustainable financing. So impact investing is a type of investment that aims to generate positive and measurable environmental and social returns along with financial returns. And the key word here is really measurable. So we are supposed to know what this impact is, how we can measure, and how we can actually showcase that there's something more than just making more money. What are those type of financing instruments? It could be really any type of financial instrument on the market, below, above the market rate, guarantees, cash, public and private equity. So there's a variety of definitions that we can learn from the private sector in terms of what kind of investment we're talking about. And then who are the investors? So we have primarily institutional investors. That's about 60% of the market. So these are your hedge funds, your bankers, your pension funds, insurance companies. And then about 20% actually are private foundations, for example, such as Rockefeller foundations, investing their own money into impact investing. And then also religious institutions, individual investors. So variety of players that we as evaluators could potentially engage in. And what's the market size? I think this is really the key. So Jin estimated that in 2020, the market was over 700 billion, compared to, for example, in 2019, where it was estimated at about 500 billion. So this market is growing rapidly and is a really huge market when you think about it, compared to the type of development projects that a lot of us have been potentially involved in. And IFC, actually International Finance Corporation, estimates that this market can be over $2 trillion, but only 500 out of it can really be measured for impact. So measuring impact and impact investing is clearly the key here. It's critical for us to understand how the money invested in specific projects actually contributes to these expected solutions or changes to the societal problems. And many of you have been involved in this field. This is growing. And there has been a trend and significant movement to standardize the frameworks and metrics that are available. And that's clearly really key for us to have accountability and for us to be able to compare the results. Just to highlight that, in this alphabet soup of impact investing and impact measurement and management, we have some principles, standards, and matrix. And just to highlight that principles are sort of these overarching engagement for companies to be part of. So for example, the IFC operating principles for impact management, just some guiding principles for engagement. Standards is where we basically see how investments align with these large goals, such as sustainable development goals, and then obviously matrix and specific tools. And here we're all very familiar with the IRIS and now IRIS Plus that offers us ability to utilize standardized indicators for the impact investment and measurement. But there's also other tools that are primarily used for sustainable reporting, such as SASB and GIRS. So really variety of tools to be used, but there's quite a lot of interest whether they can actually help us to show impact, or rather whether they only focus on the outputs and activities associated with the particular investment. So, sorry, still challenged by a Zoom after all these years. So impact washing. Is it still an issue? According to the last year's GIN survey, it definitely still is. About 66% of those surveys think that this is a major concern, so about 2/3. I think that's reflected quite in our poll. No one said that this is not a major issue. And so, again, we're looking at this impact dilution, right? So what is supposed to be considered impact? And that is key for us to engage as evaluators, because when we look at the type of investment, so for example, I don't know, in solar lamp market, are we looking at how many lamps are distributed in a market, or are we looking at the actual outcome of distribution of the solar lamps, right? So for example, increased educational outcomes for children, or for economic opportunities for their parents. So really an important issue to address. So what is it that we can do as evaluators? I come here with the hat of curious evaluator, as Veronica named me the other day. I've been curious, what is it that I, as an evaluator from the public sector, can bring to this conversation with private sector colleagues? And part of it is obviously learning the vocabulary and being able to speak to the same language. So understanding what the market is, but then how is it that we as evaluators can come in? And I think that one of the basic tools in our toolbox that we are all familiar with as public sector evaluators is really theory of change and logic models. And this is an area where private sector companies have been somewhat engaged. Rockefeller Foundation uses their theory of change in their impact investing. So it's definitely an area that we can grow in. And obviously, it's as many researchers have shown, the most pertinent and translatable evaluative tool for measurement for impact investing, really laying out the short, medium, and long-term results and what's expected at the start of investment and how we're going to measure it. Another trend in impact washing is really to look at how we can verify the impact that is claimed upon investment. And this is really where Sarah's presentation comes in really strongly. But just to highlight, what does it mean, impact verification? So where the market is heading right now is we're looking at third-party verification. So an independent verifier coming from outside, looking at the, with the investment portfolio. It's really well aligned with some of the principles that are out there, like the IFC operating principles for impact management. They mirrored practices of other instruments such as climate bonds. There's already a verifier scheme there that's been developed and utilized. And some claim that it can address these three major challenges in impact washing, which is accountability, discipline, so rigor in methodology, and in comparability. So I'll close with that, but just to say that I think that all of us can really play an important role in this process. And I personally don't think that we can move forward with only limited public resources available. We really need private sector on board to help us deliver on these larger societal goals. So thanks so much, and I'll hand it over to Sarah.
And before Sarah, you jump in, let me just connect a couple of dots. The first is, I see that there's a diverse group of people here, some of us who know each other and some of us who don't. I do want to acknowledge that my colleague Karim Harji is here. He and I were co-founders of this group. I have nothing to bring you together today, which is always a really good sign of something being good. And so thank you, welcome Karim. So So we've introduced this concept of impact assurance. We've talked a little bit about the precedent for why impact washing is important. And then we also threw a couple of terms at you, including the UN impact standards, as well as the IFC-led principles, operating principles for impact management. And those essentially act as a criteria, a set of standards by which then you can apply whether or not someone is or isn't doing these things. And I'm calling that out so that you can then also make sense of the next piece, which is the question, well, how would you then assess, hold up the mirror on whether or not we are somewhat abiding to a sense of integrity around impact. And so as I hand it over to Sarah, I did want to mention that this is one approach, and the market is growing, which she will talk about, and interesting new players are coming to the space that are not just evaluators. Right? So we can have an evaluation solution, and we can have other solutions, and we can have something in between. So with that said, handing it over to Sarah.
Yeah, thanks, Veronica, and thanks, Eva. And yeah, really delighted to be here and grateful to my co-panelists for inviting me. You know, I'm just going to build a little bit on what Eva was saying and just talk about how the impact investing industry, in part to combat impact washing, but in part due to other drivers like regulatory developments and just the general impact information gap in the market, is definitely moving to another level of accountability beyond financial results, and accountability towards really being able to back up the claims that the dollars being invested in this market are really contributing to social change. And so, you know, the industry's accountability tools or mechanisms have been disclosure statements, signing up to principles, using some of the standards that Eva had said. But impact verification brings another level of accountability. It brings that sort of independent review and analysis that helps engender additional trust and confidence. And you know, I'm thrilled to be here and know I have a lot to learn from this community, in the sense that while there are a lot of reasons why impact verification is sort of a familiar concept to the financial industry and kind of has roots in the financial industry's reliance on third-party verifiers or audits of financial valuations and reporting, there are also a lot of similarities with evaluation. Similarities in the sense that impact verification involves like an independent critical assessment of something. It involves collecting data and information in a systematic, structured way to make a judgment, and then being transparent and clear about results and findings so that that impartial and independent view leads to greater transparency in the market and understanding. And while most of what we're going to talk about, what we do at Bluemark as kind of a new but growing impact verifier is not as deep as what I think many of you might do in terms of outcome and impact evaluation, I hope and believe that as our industry aspires to deeper levels of accountability, there will be increasing connection points and opportunities for the tools of this part of the market to shape how impact verification gets practiced. So just to, with that said, I'm going to move on to the next slide. I did want to give a little bit of additional background into what we do at Bluemark. And we were launched last year. We were spun out of a consulting firm called Tideline that had been working with a number of different impact investors over the past 8 years, but spun out independently, recognizing that to bring an objective and impartial view would require sort of an arm's length from groups that were actually helping folks design and implement their impact measurement systems. And so we have been around and have done about 50 verifications up till this point. The preponderance of them have been practice verifications. And by that, I mean, we're really looking at the sort of tools and systems an impact investor has in place to manage and consider impact throughout the investment life cycle. And so as Eva mentioned, we do look for things like the presence of a theory of change as a sort of way to understand an investor's ability to articulate their strategic intent. We look at the way that theory of change shows up in their diligence and how they identify the universe of eligible investments. We look at how that shows up in their portfolio management and monitoring, and how they consider the sustainability of impact at exit. And all of those kind of guiding principles are not ones that we came up with at Bluemark, but are really rooted in the operating principles for impact management, which are kind of a growing industry standard for what constitutes good impact management. So as a verifier, we come in, we collect a lot of documents to sort of understand the processes and procedures. We supplement that with evidence of implementation of those procedures. So we look at a number of transactions and try to understand how the tools get used. And we interview team members sitting in different roles in an organization to sort of supplement and round out and get more confidence that what we've seen in the documentation is playing out in the way people understand and operationalize those tools. And, we're looking for compliance with the guidance of the principles. We're looking at the quality of the system design, and we're looking for the depth and rigor of what the system has been designed to do. And at the end of that kind of typically 4 to 5 week process and examining those attributes of an impact management system, we produce an independent statement with a point of view of how effective a manager's system is. And I'll talk a little bit about what our verification findings have led to in terms of lifting up for the market greater visibility into the state of practice. But I also want to talk for just a minute about the other pillar of accountability, which is not just the practices, but what are the results that are being generated. And we've, in full candor, are still really refining and making progress in this pillar, but have been spending a lot of time thinking about how we can assess the quality, completeness, and comparability of the performance reporting that an impact investor shares with its stakeholders. And we really want to understand the degree to which that information includes balanced, relevant, quality data. And so again, this is a process that perhaps very similar to an evaluation process starts with collecting a bunch of information, followed by kind of a systematic review and assessment, and ultimately leading and providing the market with a point of view on whether the impact performance report is of a level of quality and transparency and integrity that the consumer of that data can feel better about using it in their own decision-making processes. So I will just say, and to go back to kind of the concerns about impact washing, I think we believe strongly that if more impact verification uptake happens, that the field will have greater trust and credibility. But that's a very kind of externally motivated rationale for conducting verification. I want to also just say there is a ton of reason from a sort of internal learning benefit for an organization that we hope we're verifying clients and inspiring them to do differently. And so if we go to the next slide, I'm just going to take a minute to talk about, actually maybe the next slide because I'm mindful of time here. We earlier this year published a report that provided benchmarks for kind of median and best practice relative to some of the impact management standards that are part of the operating principles. And what we really wanted to do was lift up and help learning organizations understand what it means to have the kind of core elements of an impact management system in place. And we wanted to highlight what's possible. And we wanted to also kind of show what sort of where learners need to get to be meeting the median. And it is this kind of benchmarking that we hope will be a race to the top, that will motivate better and sort of higher quality practice, and that we ultimately can also get to this level of comparability in what people are doing on the performance side. And if we could just go to the next slide, and I know this next one is a bit of a, like, I sort of try to read. I do want to say that a lot of what we're looking for and what we see are things that I think Eva highlighted as really important from the way an evaluator might approach this. We look, for example, for the presence of a clear logic model or theory of change. And we look for really robust results frameworks that are aligned with industry standards. And we look for sort of ongoing learning and monitoring. Oh no, so sorry. Anyway, and this benchmark was published this year, but I think this will be a moving target and an evolving set of benchmarks as our field continues to grow and mature and raise the bar for what good practice looks like. So I think I'll stop, but I hope that gives a flavor for now of what I think verification is doing to address impact washing and how we can and will continue to learn and benefit from this community.
Thanks so much, Sarah. Sarah, there's one question that's very specific to Bluemark, and it's from Courtney. She asks if this benchmarking tool is available for broad use outside of Bluemark. Could you talk a little bit about that?
Yes, that report I just showed is public, and in the dashboard that goes into the next level of specificity is also public in a report that we can send around. I think the process of having your system evaluated and sort of getting your own benchmarks is one that right now we only deliver through our verification service. I think it would be amazing in time if we could have some sort of online diagnostic, but today we are really doing the kind of work of determining whether a system meets kind of a sort of median or advanced threshold based on the kind of in-depth discussion and analysis we do with our clients.
Fantastic. And there's a couple of other questions. We're going to hold on questions until Jane speaks and for about 10 minutes, and then we'll open it up. But I did want to say our colleague Jindra, who has on the quest for sustainability, has a question about whether or not Bluemark evaluates sustainability after exit. That Sarah, you can think about your response as Jane speaks. Over to you, Jane.
Thank you. Well, I am just so pleased to be on this panel today because it's one of my favorite subjects, and I'm obsessed with what evaluation can do in this field, what some people are calling an adjacent field. So let me just start by saying I appreciate Eva's teeing up of what is this field, because it's very hard to get our arms around it. And I appreciate so much Sarah's remarks about how Bluemark has created this really groundbreaking way to look at all the parts of the impact management practice. And I'm just going to end the panel part of this by saying what's on the horizon. And I think, Sarah, you put an invitation out there, is that at one time, there might be a possibility of going deeper on how do we prevent impact washing. And what I'm going to talk about are some of the norms that I'm seeing on the horizon in the impact investing space that are particularly relevant to the principles and practices of evaluation. So we want to flip the slide, please. It's just so lovely for Eva to be able to say that things like logic models and theory of change are becoming commonplace in the field of impact measurement and management. And I'm going to bring up 4 topics very briefly that I think are extremely relevant and are on the cutting edge. This is my point of view. Externalities are material. That's a really big topic right now. Do you account for externalities, which are, I'm going to go into in a moment, but it's the external factors that are influenced by the economic activities. Second, measurement is in service of impact management. I hope you caught that Sarah kept talking about impact management. And the language started out as impact measurement and management has been shorthanded to impact management. I'm going to say something about that. Inclusive prosperity, extremely important as we're talking about diversity, equity, inclusion, that we are thinking about prosperity and sustainability as being inclusive. And that the 4th one is the role of stakeholders. You may have caught that the lowest percentage on that little chart that we just saw, which you can get the report on, which is publicly available. The lowest percentage on there was the percent of investors that are including stakeholders in their assessment of impact. So let's just look at each of these 4 very briefly, just to give you an idea what I'm talking about. We could start with the first one. So this is a raging debate right now. It's really in the Biden administration, very big in the US, of whether or not we look at externalities as material to business, so that if one understands much about finance and business accounting and what contributes to value, and this is outside my wheelhouse, but I've been self-educating myself, externalities is language that it refers to that if it's not the direct business activity, if it's external to it, then it's not material and therefore does not need to be counted. And we know that business activities cause a lot to happen around them and that they have a lot of factors that affect them. And that if we start to account for those, such as the effect of any particular industry's effect on their community, on the land, on the seas, on the air, then there's a lot more to account for than if we just account for the production that they are doing. And one of my favorite quotes, just go back there for one moment, please, is from Fabienne Michaud, who is the director of the UNDP Impact Standards. And she says, profit generated from enterprise activity is privatized. The profits all go to the enterprise, but the costs of producing that are socialized. So we all bear the costs. So they are material to all of us. And evaluation really looks at external factors. We look at the systems, we look at what is happening as a result of the activities. And so there's a place where I think that impact washing could be very much mitigated. Next one, please. Here's one that's one of my personal interests is that management is the end goal and measurement is the process to inform impact management. So IMM has been shortened to impact management. What that really lends itself to is that in the field of evaluation, we have so many branches, but utilization-focused evaluation, developmental evaluation, emergent learning, our new ways of really lifting up evaluative thinking and learning partners is that we don't evaluate as a technical exercise, we evaluate so we can manage for impact. And that's exactly the place that the impact measurement world has arrived. And so we have a lot of commonality there. We can go to the third one, please. Of course, in today's time with the pandemic and climate change bringing to the fore how important it is that we've widened the inequity gap and that we have climate injustice, that prosperity needs to be inclusive, and we need to be asking the who is benefiting and how are people benefiting. Amit Bori, who's president of the Global Impact Investing Network, actually is making a profound statement when he says, let's move beyond the standard ESG questions of who's in leadership, is the board diverse? We now have to ask who are the owners, who is employed, who is served by the products and services, and very importantly, who is sharing in the prosperity this business creates. This has become a very important part of the IRIS core metric set, and two of the IRIS metrics are about gender equity lens and racial equity lens. Extremely important movement within the impact investing space. Of course, the evaluators have always had a value about equity, and the AEA is really focused on that, as are other international bodies. So this is another one where I think we have a lot to offer. Would love to see this in the impact verification space, because if we don't look at who's benefiting, then we are looking at perpetuating the old system. Okay, and the last one is talking about old systems. I'm going to bring up the idea of stakeholder capitalism, get wonky on you now, but the stakeholder capitalism movement, which the Business Roundtable itself acknowledged that shareholders are not the only ones who matter, it's stakeholders. We need to recognize that they are the ones who need to be engaged in solutions, and that in evaluation, there's a long tradition of participatory methods. We have so many different names for it: participatory, stakeholder evaluation, specific methods like significant change stories. Now we have transformative, indigenous methods, many, many methods, because we actually believe that if stakeholder voice is not part of the process, even in designing solutions, managing the implementation of solutions, understanding the success of solutions, then we really are not understanding the story of what's happening to the people who are most affected. And that is what impact is really about. So I think, again, evaluation has a lot to contribute here. Those are my, these are my points of view of what's on the edge for us to pay attention to and ways for us to further engage. Thank you.
Many thanks, Jane. And so we're right on time, which is quite fascinating to me. There are a couple of questions in the chat. We really want to turn this over to you to ask your questions, your burning questions of Eva, Sarah, and Jane. I'm going to start off with a question from Jindra, who asked about whether or not Bluemark is validating or verifying sustainability after exit. Like, and maybe Sarah, you can just talk a little bit about, you know, how the impact investing space is thinking about exit just generally as well.
Sure. I mean, I think that topic is a huge one in the industry and one that many investors struggle with. When we looked at our ratings of investor practices, starting from kind of laying out intentions through to monitoring through to sustaining impact at exit. They sort of the level of compatibility or compliance with the principles which set, you know, a high bar decreases. And I think for a whole host of reasons, the industry has still a fair bit of work to do to really think about how to set its investees up for success after exit. That said, there are the operating principles for impact management do lay out some clear guidance, and then other organizations have put out research and done a lot of good thinking about what that could look like in practice for different asset classes and investors with different types of stakeholders. In reality, when we talk to many funds, that the sort of state of practice tends to be that there's kind of consideration about the way that their interventions, whether it's helping a company improve kind of its ability to do life cycle analyses from an environmental point of view, or whether it's helping it sort of embed some better ESG practices, whether those will be able to be part of how the company's just sort of operating even after their dollars have been returned or after they've exited. But it's certainly the case that the long-term evaluative work of the impact of those perhaps even early stage highly additive dollars in terms of driving greater business growth and greater benefits to clients is not well understood. And maybe the last comment I'll make there is that perhaps a handful of the organizations where we've seen the most thoughtful work have been the development finance institutions who've had budget to hire evaluators and done kind of longer term over time looks at the way they've been, their dollars have made a difference in different communities.
Fantastic, Sarah and Jindra, always consistently asking that question, which I love over the years. I'm going to turn to John Sherman. John, could you ask your question live?
Sure. I was, you know, there's with all the talk about assurance and verification, I'm hooked on, and as Jane knows very well, it doesn't really matter unless there's actually some some penalty for non-compliance. So what happened? Who decides what the penalty is if you don't, Sarah, if you find, or that something in your assurance is that, well, you can't assure that they did what they said they were going to do. Is it just, hey, we have to educate investors and so the market will do the punishment, so to speak, and not put their money there? Or is there a role for public policy? I think a lot of you know I have a point of view in this, but I'm really curious about how the panelists see this. We're say who sanctions and how tough are the sanctions?
So who wants to take that question?
I can start, and then I would welcome other feedback. I mean, I'll just say that in an era of predominantly voluntary standards, there's not a lot of enforcement. It's interesting in the case of the operating principles for impact management. One of the ways we've tried to encourage folks who may not really be appropriately signing up for the use of the label, the impact label, and signing up to be signatories is through our ratings. And we've seen folks that have gotten very low ratings through our verification process have, maybe rethought whether they want to stay being signatories or whether they are really, quickly moving to change some of their practices and up their game to be relevant. So that is a voluntary enforcement mechanism. I just took a look at the CFA ESG disclosure verification standards, and they're not going to allow modified statements, which would mean basically if you didn't disclose in a way that was compatible with their standard, you wouldn't be able to be verified publicly, which in of itself is a sort of way to keep people honest. But clearly policy regulation and sort of the financial or other kind of implications that a group like the SEC or the European Commission could impose have a different level of heft to them than we're seeing in the voluntary market. But we're seeing more regulatory regimes acting in ways that will bring that kind of teeth.
Jane, did you want to add? Or Eva? I can add too.
I just like the distinction that Sarah's making between voluntary enforcement and policy regulation. John and I are working right now on an OECD project, along with a number of people in this room, including Veronica, which is really looking at what are the policy opportunities to engage stakeholders in impact measurement and management. And I think that there's room for voluntary enforcement, and that without public policy regulation, we're not going to see an overwhelming response. So I want to share that observation that many of us are really working on the policy side of this as well right now.
Thank you. And so, Eva, if you wouldn't mind if I move to the next question, or did you want to jump in here as well? Great. And so, being an organization that also has gone through the Blue Mark verification process in service to wanting to join up to make it transparent and signal that we are also walking our own talk. I would say the transparency piece, which Laura in the chat is also highlighting, that OPIM requires signatories be published. That adds to the transparency piece, but agree, the regulation and the regulatory component to it is probably next to come, and who knows how that's going to play out, but hopefully we can all at least participate in shaping that a little bit more. I'm going to turn to Ben. Ben, you asked a really interesting question in the chat. Would you mind voicing it over? Ben Kerman. And you're on mute. And you're still on mute, Ben. Oh, but it's saying you're not. Oh dear. Okay, Ben, let me do the voiceover on that. Is that all right? Okay. So your question is essentially picking up on Jane, your point around measuring to manage for impact. And given that impact investors rely on investee data, does it make sense for the evaluation industry to also attend to addressing this part of the impact claim supply chain? Jane and Eva, do you want to jump in on this piece? Or Jane?
I'm happy to. Eva, do you want to go first?
Sorry, go ahead, Jane. I'm still digesting the question.
I'm going to just say a resounding yes, Ben. Absolutely. I find it very unfortunate that the world of evaluation grew up over 70 years ago, and that the world of impact measurement and management grew up over the last 20 years, and that in fact, IMM has chosen to be IMM rather than M&E. And that doesn't mean that M&E is the same as IMM, but there certainly was a long tradition of evaluation that the finance world could have turned to and tried to adapt to, or help the evaluation world adapt to that. But instead, many of us, including Karim on this call and Veronica and Ted Jackson, wrote a paper early on about these are parallel streams. And these days they are coming together. We need to all be working together, just like the sectors need to work together. So does the evaluation IMM community. So that there's actually a distinction, Ben, that I'm hearing being made. For instance, a colleague just recently went to work for, I'm going to get this wrong, DFD? I got the acronym wrong. Help me, Sarah.
It's Leticia.
DFC.
DFC, because they rechanged their name from OPIC. So they are actually talking about renaming M&E to IMM at the federal government level, and talking about doing evaluation periodically, but doing monitoring regularly. So I think the distinction is starting to be made where monitoring is happening as a regular part of IMM, and deeper evaluation is going to be more thematic and more periodic, more portfolio level, more thematic, except for the deep end investors, which we'll hear a lot about when we hear from Karim and Penny Hawkins and others on the next webinar.
And I'll just add
your question. Ben, does that address your question?
Can you hear me now?
Ben, you're back. Yay!
Yeah. Thanks. It did in part. I guess I'm also thinking about this. For impact investors that I've worked with, we rely a lot on the enterprise, the investee provided information. So, in fact, a lot of what the impact investors report to their audiences is dependent on the quality of the data that's come in. And I think that what you're sharing today really helps verify that. But I'm thinking about moving upstream and how we get to support enterprise claims in the first place. So it's a slightly different topic, but it's thinking about a big tent. It's thinking about impact and influence on potentially on a much bigger scale. And I know some evaluators are starting to look at that. How can we get to that pent up demand, which is only going to grow as regulators as well as impact investors start raising the bar on what they expect to see. So that's kind of where I'm thinking about. I'll stop. I'm glad I figured out my microphone. Sorry about that.
Thanks, Ben. And I'll just say, coming from the development finance space as well as the philanthropic and the impact investing space, I would say that for those of us who have been doing M&E, we know that capacity building and TA at the organization at the field level is really critical. And my observation on the impact investing side is that it's still the same case, right? And so the question is then, who are the TA providers, the capacity building providers? And in the impact investing space, we often have the conversation of who pays, because if you're optimizing for both social and financial performance, you typically are optimizing more for financial and hoping the impact in the social piece will happen. And any dollars that you spend on the social piece is taking away from potential revenue generating opportunity. And so I think that the impact investing space has really struggled with this over the years, which is why we have now, we're seeing newer technologies like 60 decibels, for example, is a service provider that helps you collect the data, does the TA with you at the social enterprise level, and then helps translate some of that to the investor level or the fund manager level. And the price premium, because I know there's a cost question there, is pretty low depending on what it is and how big it is, like 5 to like 20,000, which is very different than what an evaluation would be. And I can tell you right now that while that to me sounds like a pretty low offer, I've had many conversations with social enterprises who say that's too much. So I'll leave it there because that's not the focus of this conversation, and I'll turn it to Matt. Ripley, would you mind asking your question?
Sure. Hi, everyone. And really just picking up on that theme, I guess, around costs, and a quick question. It's just on verification in particular. Just be interested to know kind of how much it costs on average or a range. Just thinking that, ideally you want every investor, impact investor, to get verified, but could it make it too expensive? And some of the smaller investors might be put off, but kind of too cheap or kind of too low cost, but then actually you can't do the depth in the verification that you presumably need to actually verify with kind of practice and processes. So maybe tie it to assets under management, but it'd be interesting to kind of hear about the strategy to make this a big tent and get everybody verified at the end of the day.
Well, I can start and just say, I should just be clear. Bluemark is one impact verification provider. I know that the big 4 audit firms are offering assurance and verification services against, for many corporate reports and impact reports and many impact investors. And then there are a number of other firms that are smaller, kind of like Bluemark, that are providing similar services. So I can't really talk to everybody's price structure, but for us, we price our sort of 5-week practice verification on average at $23,000, but we have a reduced fee of $9,500 for emerging or first-time managers with smaller assets under management, because we would really like to democratize access, or really not make it so cost prohibitive that folks can't have a third party look under the hood and give them that sort of independent assertion because it's too prohibitively expensive. And on the question of how to kind of keep cost and our costs at a level that we can charge a fee that allows us to be a self-sustaining business, we have been able to, in part through COVID, to deliver our services entirely virtually, and that has not compromised our quality. I think as we move more into looking really deeply at data quality on the kind of performance reporting side, and I guess this came up a bit in the supply chain question too, like how do you really ensure the fidelity of the data end to end? It'll be interesting to think about the market's appetite to pay for reasonable assurance versus limited assurance, or sort of deeper dives versus lighter dives into their reporting quality. And I think we'll have to wrestle with that as a field and as a market. And a lot of what the results where we land will depend on our probably asset allocator or asset owner demand, and how much they really say we need to see really good data to feel confident investing in these impact funds. So a couple comments there.
Thanks, Sarah. Jane or Eva, would you like to weigh in on the cost comment? Are we good?
think that's great. That's great.
Great. Eva, you too? We're good. Okay, so we are down to 5 minutes. We have some closing remarks and wrap up, but it shouldn't take too long. But I did want to make sure that if there are any burning questions out there that the chat has either prompted or that this conversation has prompted, we get it out there. So any other questions, clarifying questions? Are you curious? I'm curious. Okay. All right. Ben, Rolfer. Okay, so I'm transitioning us as we, oh wait, Ted Jackson. Ted, that's a comment, not a question. Do you want to say your comment live? Hi, Ted.
Hi, yes. Thank you for doing this. This is great. And I really appreciate the issues around cost and methods and the journey that this is taking. But I did want to note that outside the space of ESG, IMM, and evaluation, companies, individual companies, and coalitions of companies engage in politics. This is not news. But a really good example is the U.S. Business Roundtable, which has been a very good advocate for stakeholder capitalism, and that's welcome. But its members have mounted a fierce effort to fight against any tax changes and certain social policies in the U.S. that the Biden administration is bringing forward. So we need to do our work in, the evaluation, ESG, IMM space, and that's what we're doing today, but not to ignore and find ways of engaging this broader political battle as well. That's all.
Great, thank you for that. And we had a conversation last year, AEA, John, Deborah Rugg, and Jane and I, just on this topic, that if we're looking, and to me, this is part of the hypothesis around scale. If we're looking to mainstream and scale impact investing, and Sarah, you might have a perspective on this, it to some extent has to become a policy regulated issue, right? Because why is anyone going to do anything if it's voluntary, like really? And so when coming back to this issue of impact washing, I think that's like the next step. And the idea would be that as that happens, as it's happening in the European market, we would have both the supply and the tools and the demand, like the push and pull, to actually be able to deliver then on the premise around decrease impact washing. And we're running out of time. So the urgency behind this is really high when we look at the degrees by which climate and temperature is increasing. Our house is burning. And so as we wrap up, Jane, Eva, and Sarah, I would love to have like one comment that you are taking away from this conversation. And maybe Eva, we can start with you.
Thanks, Veronica. You actually stole my thunder because this was exactly what I was going to say. I'm European, and I look at what Europe is doing and the taxonomy and sustainable finance and the comments that John brought forward and Ben, just really looking at should it be voluntary? Should it be regulated? I think this is a really important question, impact verification. And I think we can look to other markets and see how, where the market is heading, for example, on the other side of the pond. So that's what I would leave us with.
Thanks. Sarah, over to you.
Yeah, I don't know. I was thinking about coming here today, and I was reminded of a former advisor to me, Eleanor Abraham, who's a professor at Tufts, and his sort of view on nonprofit performance management and evaluation is so much more about sort of strengthening the organization and how does an organization that is doing good work in the world learn and benefit from evaluation. And I don't want to lose sight of that in these conversations and have kind of the regulatory and top-down driver for accountability be at the expense of organizations doing the internal systems change work that they need to do to be their best. And so somehow I feel like this community that I'm having the privilege of being part of today is so well positioned to help us thread that needle well as a field. And I would love to see that happen going forward.
Thanks, Sarah. And then Jane, over to you, and knowing that we're at time.
I'll be very, very brief. It's just heartwarming to see this many people interested in the topic and 3 times as many signed up. So we know there's going to be a lot of listening. I do believe the evaluation field needs to get energized. I keep getting energized every day when I read the news and when I see what's happening. And I think that we have so much to offer in partnership. And I think the reception from the impact investing field has been warm. It's been warm as long as we all respect folks are coming from different places and we need to learn each other's languages. And we need to learn what data means in each of these contexts. So I just am really believing that we're all welcome in this playground and we are needed because of the urgency of the issues facing us today.
So there you have it. Thank you very much for the social impact measurement TIG at the AEA for hosting us today. There's a bunch of links to the reports, to the standards in the chat. This session has been recorded, so you can come back to it. And please feel free to reach out to our colleagues that organized us with any questions or follow up to any of us. Bye-bye, everyone.
Take care.
Thanks, everyone.
Bye.
And